Hi, welcome to Money Masterclass. I'm Kartik Malhotra. Well, it is often assumed that investing internationally, especially the US, involves big dollars. And it's also assumed that it is only for the rich and famous, so to speak. Is that true? Well, we'll find out on this show today as we debunk a lot of myths and try and get a lot of knowledge around starting your investment journey if you're looking at international exposure in your investments. Swastik Nigam joins us on Money Masterclass today. Hi Swastik, Swastik Nigam from Winvesta joins us on Money Masterclass. Swastik, pleasure having you on Money 9. Well, we are trying to understand everything it takes to go and start your international investing journey. So first of all, take us through what does Winvesta do?
Thanks a lot, Kartik. It's a pleasure being here. So Winvesta is a cross-border investment platform. We are a UK headquartered broker and very recently a neobank. We enable Indians resident here in India to invest globally. We started out with enabling them to invest into US stocks, and very recently we've also provided them a platform through which they can continue holding onto money and through an overseas multi-currency account as well.
Right. So we'll come to the multi-currency bit, but first let's get all the complications out of the room. If I have a demat account in India, and if I have a bank account linked to my demat account, am I through? Can I start my US investing journey? Can I just hop onto your platform and start trading, or is there more intricate paperwork and documentation required?
Yeah, no, that's a great question. And it's slightly different, but thankfully there isn't as much intricate paperwork as one would expect. You start off with pretty much simply, downloading, for example, our app. You would complete a completely digital onboarding journey on the app. It takes you as little as 5 to 10 minutes. There's no paperwork involved. In fact, not only is it sort of not paperless in terms, you don't even need to upload documents. We just take photographs of your ID card, your address proof, which could be a PAN card, an Aadhaar card, for example, and a live video KYC. All in, you're finished within 5 to 10 minutes, and then it just goes within the next few minutes, ideally 15 minutes to 30 minutes, you can actually have your US brokerage account ready. Right? That's your account that's now been set up. The second part is funding your account. It's a good idea for us to just think of it as a corollary. Like you mentioned, can you just link your bank account, your demat account here in India? And you can do that seamlessly in India. But as soon as you get into international investing, you have to follow what the RBI's guidelines are in terms of sending money abroad. And that includes, going to your net banking at your bank, adding the account beneficiary, which is your US brokerage account, and then remitting the amount through your bank accounts. But that itself has now been digitized for a large, majority of the private banks at least. So you can very seamlessly add a beneficiary within 4 to 5 minutes and start investing, by the end of the day as well. That seamlessness is now sort of something that we see coming through into India. About a year ago, you probably have only 1 or 2 banks at maximum that are doing this. Now a lot more are doing it. But yes, by the end of the day, if you've sort of downloaded the app, you could be investing in the US markets.
Right. So I think 10 minutes is all it takes to start your US investment journey. For all our viewers there, the RBI mandates that the LRS, the Liberalized Remittance Scheme, permits an Indian to invest only up to $250,000 per annum in US securities. Well, it's not limited only to securities alone, but any remittance, any international investments that you want to do, the limit set by RBI for Indians is $250,000 US. Well, for such trivia and a lot more information, do subscribe to our channel at Money9 Live. Visit our website www.money9.com, where we'll get a lot of influential, a lot of knowledgeable people like Swastik himself and many more, where you can listen to and you can consume a lot of content around investments and start your investment journey. Well, Swastik, continuing with our conversation around the US investment landscape, it's often assumed that it's only for the rich. It is assumed that if you have tons of money, should you start looking internationally for investments? A, is it a myth or is it a fact? And B, what are the kind of costs involved?
Kartik, that's actually a very good question. If you would have asked me this about a year and a half ago, I'd say that's quite true. take a very simple example, right? A stock like Amazon's about $3,500 for one share. And you'd need to have at least over 2 lakh rupees to start investing into one share of Amazon, right? But thankfully, like a platform like ours allows you to invest in fractional shares, which means that even if you want to invest as little as 10 rupees or 1,000 rupees and get access to Amazon's, performance over the next many years, you can do that because you can invest as little as you want, in that. And that allows customers now the ability to invest across a wide variety of stocks, building diversified portfolios for very small amounts. Right? That is something where truly democratization's taken place in terms of providing this. The second part is commissions itself. Previously you would have high commission platforms only, but as we've seen the likes of a Robinhood and so on, the commission structures have really compressed. You can start paying no setup fee, no upfront costs for us, no monthly costs. You get a number of free transactions per month. So for example, on our platform, you get 10 free transactions in the first month and then 3 free transactions every month since, where you can make transactions paying no commissions, right? And that's another part of democratization. So the cost structure has really come down. Let's get to your second part. What are all the other costs that are involved? So we've spoken of commissions. The big part where one needs to be concerned about is the cost of remittance, right? When you send money out from your bank, there are 2 parts to this cost. One is a fixed cost, another is a variable cost based on the FX. The fixed cost varies anything from 100, 200 rupees to even 2,000 rupees based on the specific bank that you bank with. These are costs that are charged by your bank and not by our platform. And there's another cost, which is the FX fees. And that's anywhere from 0.5% to possibly even 2%. So you've got to be wary about those particular costs. And it always helps to speak to your relationship manager when you're looking to make these transactions if the costs are going to be high.
Right. So talk to us about your multi-currency account. Is that where it comes in? Can I just plonk money in your multi-currency account and that way my foreign exchange cost gets compensated or reduced slightly? Or how does that work?
Yeah, no, that's a very good question. So the multi-currency account is to be able for you to build a singular hub for all of your international investments, right? Whether it's US stocks or other investments to make as well. At the moment, the multi-currency account is not able to mitigate your FX costs from your Indian account, right? When you're sort of sending the money out, because that's in the control of the banks. But you don't really necessarily need to have a multi-currency account, but it always helps. And here's the reason why, right? Say you're investing directly from India to the US brokerage account. Now the broker is required under global anti-money laundering rules to send the money and repatriate it where they see it arrive from. So if it sees it to come from your Indian private bank or public sector bank's account, it'll have to repatriate it over here. But lots of clients are looking to make these investments systematically for a particular goal. I want to save up for my child's education. I want to possibly buy some real estate. I want to migrate abroad, right? And that's where the multi-currency account comes in as a hub. So even if you've got a 1 year or a 5-year plan to have to save for a particular cost, that's where the multi-currency account becomes very important. So you'd send the money straight to your multi-currency account and then invest it to your brokerage account. And then so when you liquidate it, it will go back to your international account rather than needing to bring it back necessarily to India. Right. So that's where the MCA is very valuable.
Right. So which means that every time there is any investment of yours which is appreciating, that appreciation comes in the native currency of your place of investment. And you need not necessarily repatriate it or convert it back to INR every time you want to break your investment. It can very well stay in that account itself.
Exactly.
So that's an interesting feature, Swastik. But coming back specifically to investing in US stocks, and I'll stick to US for now. There are dozens, in fact, last round 38 odd mutual fund schemes which are offering similar sets of stocks, similar baskets of stocks and ETFs for investors to invest in. No repatriation required, right? No demat account required, no Winvesta required, with due respect. So, who's the investor who's taking exposure directly?
Yeah. Oh, that's a very good question. See, there are certain things, of course, there's a convenience that comes in from investing directly into a mutual fund. But, you sort of hit the nail on the head when you said there are 38 of them, right? On a platform like ours, you've got 4,500.
10 of them launched just in the last 1 year. 10 of those were launched just in the last 1 year. So one can see a pattern that there is interest, right? But then those options seem far more lucrative than doing all this thumb of creating a new account and going directly and repatriating. What's the point?
Yeah, no, true. So I will I'll sort of just particularly mention, right? One is the spread of securities, right? Each and every new company that IPOs in the US, you've instantly got access to it, for example, right? And we know there's a large number of companies, even many Indian companies that are looking to now possibly IPO in the US, right? So you've got instant access to those individual single name stocks. The second thing is investment selection, right? You are, when you invest in a domestic fund, which is a rupee wrapper of a overseas fund or an index of some kind, you're getting access to, you're not able to select stocks particularly yourself, right? Say lots of, it's just the S&P 500 or the NASDAQ 100 or, the top 10 of some kind, but there's a third-party asset selector which is making those investment decisions, right?
That's right.
And that also, by virtue of doing that, they need to add costs on to the structure, right? So for example, where a NASDAQ tracker in the US has less than 0.2% is the fee that you'd pay for it. You're paying at least somewhere between 0.5% to 1% in fees for that same access. Not to mention that stays denominated in US dollars and it's a very far more liquid market, right? So even intraday pricing is far cleaner for yourself rather than investing it through a fund structure. So asset selection, and we have to think, right? Each of these new funds that keep getting launched, they need to go through a set of approvals. So there's a significant delay in which it'll come on and to finally be present here in rupees. There, of course, is a large client set, and this really works very well for them, right? Who don't want that particular access, who just want the convenience of rupees and not necessarily in different currencies. But then there are others who are far more nuanced, and if I just want to invest in 3 big name tech companies, why should I not be able to just specifically invest in that? And that's a luxury you will not have by just investing in domestic mutual funds.
Right, Swastik. Sometime back, you were quoting the example of the Amazon share price of $3,500 and the possibility of fractional ownership. Sometime back when we had spoken a couple of months back, exactly, you'd mentioned that FAANG, of course, the Facebook, Apple, Amazon were the more popular category of stocks, and technology stocks, as we understand in general, are more popular. What is it that people are choosing right now? Are they going after the FAANG Plus of Tesla, Twitter, etc.? Or are they moving beyond that, venturing into other stocks as well, which are at present a little unheard of in the Indian community, and people could go ahead, do their research and explore?
Yeah, no, that's a very good question. In fact, one of the exciting things that we've noticed, which we tweeted about a couple of weeks ago also, was about a increasing interest in electric vehicles and stocks, which are EV vehicles, with no presence in India, right? Even if you sort of think of a Tesla, of course, Tesla is a story in itself, but beyond that, you've got Chinese, EV manufacturers like NIO and so on, which have received a great deal of interest. So electric mobility is clearly an interesting theme. Beyond that, we've seen, like we saw about 2-3 months ago as well, and that's continued to be a bit of a trend, which is like the ARC funds managed by a well-known manager, Kathy Wood. So he's continued seeing interest beyond the regular well-known names. In fact, over the next couple of days, we'll be releasing our Q2 report of the most exciting trends that we have noticed, with changes across a large number of demographics as well.
Right. So tell us the highlights of that report. What is it that we should expect from that report?
Yeah. No. So I think you'll see some very exciting information that we show about increase in the gender sort of disparity as well. That the number of cities that have sort of changed from Indian investors that are investing out as well. So those are very exciting trends that we're looking forward to.
So this is the headline city that comes out. Do we assume it is one between Delhi, Bombay, Bangalore, or can we be a little more adventurous and think of other?
Not really. So, we, of course, all of the major metropolises are in the top 5, but we sort of not always seeing that trend on a month-on-month basis. So as soon as we release, I'd absolutely, love to share that with you and your audience as well. The other part that's very exciting is people are understanding the nuance that we see that longer term investors are making repeat remittances, right? So once you sort of dip your toes in, investors are becoming more committed. So the average account sizes on our platform are increasing for every kind of customer as well.
Right. So what's the average account? What's the average account size right now? And what's the average, if I may say, investment per annum per individual size? If you can throw some numbers at that for our audience to get an understanding of whether they fit in or not. Are they very well in the mean or they outliers?
Yeah, no, I think it's good to mention these numbers both as an average as well as what we see as median account sizes, right? Sure. The average account size is now straddling around the $4,000 mark, right? And that, of course, tells you that's about 3 lakh rupees. So that is it really still for the wealthy? But no, I think we got some certain outliers in terms of clients with massive portfolio sizes which tend to move averages. Now, when we speak of the median, right, and this is really exciting, we've got accounts as little as $10 all the way to few hundreds of thousands as well, right? So that talks of the democratization. So the median account size is somewhere between $600 to $700, right? And I think this is where, in spite of small account sizes, many of these accounts are well diversified, right? Which would be something you wouldn't have been able to do without a platform like ours.
Right. So if you could list out for us, in fact, I started this question, never permitted you to finish because we digressed. Outside of the FAANG and the Twitter Tesla, top 5 US stocks that are gaining traction in the Indian community right now.
Sure, I'll try to remember the top of, I think we're definitely seeing a great amount of interest coming for the EV vehicles, electric, other than Tesla, we've got NIO and XPeng, which is one of the Chinese firms. We see an interesting interest, and which we published about as well, is a proxy access to crypto, right? So you got blockchain miners, right? Crypto mining companies, right? So you're not investing in crypto, you're investing in a company, but whose business model is related to cryptocurrencies. So, of course, this is a kind of a proxy access, and it is very volatile, of course, because most of these companies' fortunes are closely linked with cryptocurrency. But we're not being a crypto platform of any kind. You are finally investing in a company whose business model is around cryptocurrency. So that's one other part. Of course, due to the pandemic, there's been a continuous increase in 2 other kinds of themes. One is remote working, and the second one is pharmaceutical companies, right? Those which have vaccines. So you're currently seeing, interest around firms like Pfizer, Moderna, and then you'd see interest around remote working, which of course is now starting to pare itself down. But we've continued seeing interest, particularly in IPOs of project management companies, for example, right, or software companies which are helping distributed work, whether it's an Asana or whether it was something like Zoom as well. So you continue seeing continued interest across firms like that as themes.
Right. Swastik Nigam, always a pleasure hosting you on Money9. Thank you so much for joining us and sharing these wonderful insights. And we hope to have you with us again once you release your next report. And do keep us and our viewers informed of all the trends that you are spotting at Winvesta. Thank you so much for joining us.
Thank you. A pleasure as always, Kartik. Thank you for having me.
Well, that's a wrap on this Money Masterclass. Thank you for tuning in. And if you still haven't, please go ahead and subscribe to our YouTube channel. And do look up our website, www.money9.com. Thank you so much for watching. Bye-bye.